The market has accelerated to the downside today. Do we have lower? Is this the lower high, the first inclination of that bear flag we've been watching to head us into a bear market? Or can some of the data that we have the remainder of the week spur us higher? What's going on, everybody? My name is Dr. B. I'm a holistic life and business coaching strategist for entrepreneurs, options trader, also in the futures market as well. And I've been trading for the last 6 going on 7 years, have traded 2018 tariff market with President Trump prior, and also a 2022 bear market. So in this analysis today, I want you to see some key things with SPY and QQQ and the overall market, some of our key names such as NVDA, Tesla, and why I've been telling my Leverage University members, which is our membership Discord and our community for entrepreneurs, thought leaders, and folks that want to learn how to read the economy, understand the stock market, and also make money and income with trading. All right. So if that is you, click that like button, subscribe button, turn on the notifications bells. And also I'm listening to a lot of your feedback. So let me know down in the comments. I'm always up for constructive criticism. So I have raised not only my voice level a little bit, hopefully, but also the level on my mic. All right. So let me know down below. I've been listening back to on my phone, on YouTube, and also on different devices just to see. And I'm like, man, like it sounds good to me, but I do understand if you're flipping from channel to channel and you're like, man, this one's super loud and I got to raise it up for his. So I am listening to you guys. Thank you so much for the support. Make sure you click that link below, join Leverage University. There should be a small discount code there for you. We also have our stock market boot camp. They'll be coming up for the month of April and starting a new quarter. So if you're really wanting to learn how to trade, if you're wanting to get your chart set up, if you're wanting to learn some of my strategies on how to trade properly with certain setups, A+ setups as we call it, and generate income, please click that link down below and comment boot camp and we will send you some information. You're also welcome to comment boot camp on my IG DMs and we'll send you some information there. All right. Thank you all so much. Let's jump into the charts today and see why the market has pulled back and what to expect for the remainder of the week and the month. Okay. Getting a video out earlier today. There's my thumbnails. Getting a video out earlier today. So we will see what happens. All right. So some key levels, let's just go and jump right into the SPY, the QQQ on the charts. I'll get rid of some of these lines because I know I have new folks that come and see us each time on these videos. So some key levels that we needed to hold on the SPY ETF SPY was really 570 today. Okay. And I'll show you the reasoning why 570 is because if I turn on my moving averages, 570 is that key daily 200 moving average that we've been talking about for a while. Okay. Now, Brian, like every time I try to get into a call or I'm trying to figure it out, and if you are an expert in this field and you want to comment down below, hey, I saw the same thing, or I'm watching the same, sentiment that you are, please let me know down below because we have new people that are coming into the markets and maybe they've never seen a 2022 bear market or the potential of a more downside to come because they only think the market goes up in a straight line. All right. So with that being said, why did this spur on? Well, we've still got Trump tariffs that are still on the horizon, and it's really not the tariffs anymore. It's more so the uncertainty of what President Trump is going to say next, and also the fight back and forth between him and also the Fed. So he's pushing the Fed to cut rates and cut rates. They're fighting back saying, no, we don't like it yet. They don't want to be strong armed. So it's just that fight in between, and with investors holding their stocks or their positions in the markets, their hard-earned dollars, they don't want uncertainty. Okay. Hedge funds, even retail investors don't like uncertainty in the markets. So when you see this type of reaction here, you shouldn't be shocked that it spurred up for 2 days and slowly grinded up. And now it's back down and pretty much, almost giving back the whole gains from that little grind up that we had if we finish the week off even weaker than we are. Okay. So I want you to pay attention to this 576. Okay. This is why the money is on the charts. Okay. 576, 575 really. Okay. Was that previous level of support that we broke down under and it turned into resistance. Okay. Right here, where we broke down underneath it, We went down to 567, came back up and got stuck right at 576. Okay. So as it's approaching that level again, you can't just assume, and I'm saying this because I know there's some people out there that are maybe frustrated, right? And we'll get that frustration out of you by understanding where things are going and what to expect. I expected this drop to happen one of these days of this week as we were slowly grinding our way back up. Okay. Another sentiment that I like that I still need to create a video on it. So comment gaps down below in the comments if you want to understand my kind of gap fill or gap strategies. Okay. You see this light gray area on the charts. Okay. Let me get rid of this. Light gray area on the charts. These are what we call gaps in the stock. Typically overnight, there's good news or some type of sentiment happens. And in this case, it was good news where Trump was lightening up his sentiment on the tariffs, right? So we opened up the market and we went from about 564 all the way up to 570 and pushed up right into 576. So it created this gap in the stock. Typically, when you see that, it's pushing up into what we call a liquidity grab. Liquidity grab essentially means, in the simplest of terms, is pushing up into a level where there are buyers and or sellers, or there is a specific level that stock wants to essentially magnetate towards. Okay. So in this case, it needed to retest this 576, 575. So it essentially gapped up, went up, touched it and said, cool, I tapped it. Okay, cool. And then I'm coming right back down. Okay. So that gap is beginning to get filled right now. As you can see, I'm on West Coast time. So the market closes in roughly about an hour and 15 minutes. So there's still about an hour and 15 minutes left. And I'll close this video before it closes, obviously. But I just want you to show you that it's still selling into the end of the day. Okay. Which is going to be very interesting going into tomorrow and the rest of the week, because this gap is probably going to get filled and we're going to give back all that gap up and come right back down to where we were. All right. So here's some levels to watch out for on SPY. Okay. Where would you want to enter if you're trading now? All right. You want to use that 570 if possible. If we can pop back up into about 570, that would be ideal. Okay. If we can pop back up into that 570, because now that 570 is resistance again. Okay. That would be an ideal level that you'd want to see it kind of pop back up into, like this, maybe back up into 571, 572, which is that VWAP, this yellow line here. Okay. And you'd want to see a little bit of a pop back up. Okay. Something like that. That's the ideal trade for taking it lower, not taking it higher. Okay. Because the trend has shown that that is a pretty strong resistance and we can go lower even more. So if you trade the upside here, okay, you've got to know that, okay, where's my target? I might could trade it from 568 to 571, but then it could turn into another lower high and come right back down like that. Okay. And fill that full gap all the way back down into that 563, 562 level. Okay. So with that being said, I want you to pay attention to that 570, 571 level tomorrow. If you are trading SPY, if we remain below 570, we are technically weak in the short term. Okay. Weak meaning it's just going to keep selling and keep selling and keep selling and keep selling. Okay. If you are a person that likes to trade calls, I'd probably look for ideally somewhere along the lines of, if you want to scalp it, probably close to this 562, 563. Maybe you could get some levels around this 564, okay, which is right around here. So if it falls down into this 564, that would be the first level of relief that you could probably get a little squeeze out of. Okay. Everybody cool? That's good for everybody. All right. But ideally, I'm looking for another push back up to slam puts right back down. Okay. Depending on the data that comes in, we have GDP tomorrow and we have PCE on Friday, and we have these tariffs that are coming into effect probably over the weekend. So I doubt that a lot of buyers or stockholders will be holding their positions over the weekend. So they got a nice push, and I guarantee, most likely, if I was a betting man, that I would not want to hold my positions over a weekend where there could be potential news, tariffs, information that comes out over the weekend or the Monday morning into the start of a new month and a new quarter. We also have tax season as well. So we could have some liquidation of some assets for tax benefits, tax purposes for those that are filing. All right. There's QQQ. My level on QQQ is we failed back underneath this 485. If you can see that 485 right there, that is now a resistance. Okay. We popped up above it, squeezed back up. Great. Now we failed it. Okay. So we are into the gap, as you can see, and it could be a free fall. We've got more gap back down, but you never want to ideally chase unless you know what you're doing. Okay. Unless you have a larger account, you can add multiple times. You can take a little momentum and trade it down into that 480. But what if we get super weak and start really aggressively coming down? I mean, that I doubt, in my opinion, like having one big fail swoop drop from 483, a 13-point drop on the Qs, the NASDAQ, ideally. I mean, today we dropped from 493 down to 483, so a $10 drop. Another $10 drop could happen again. That's a possibility, but I'd want to pop back up if possible. Okay. IWM, beautiful here. This is a trade idea I put in the community inside of Leverage. So there it is, filling the full gap right there that it had, down to about 204, 203 and some change. So any of my community members that took that 208 put, beautiful, absolutely beautiful. Okay. Let's see here. Let's go to a couple key names, notable names. NVDA had some news today, and it wasn't just the news. Like I tell anyone that's been watching my educational videos, the charts tell the story of the levels, and typically news follows where the levels are. So NVIDIA, and what that means for some folks, like what? NVIDIA had resistance around 122, 121, right? Do you see these sellers? Big rejection there up to 125, but then 123 fell back down to 118. Came back up here, failure, sellers, failure, sellers, 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 sellers. Can't get back above this general zone, okay? So today was the aggression based off of news. So even though you could have played puts off of this level, in my opinion, I told my group this yesterday, if you're inside Leverage University, comment down below Leverage and say, hey, Ryan, I'm here. I see you. Like, yes, all these things are happening. Just so people can see that our sentiment, like how to read the economy, is typically on point. Okay. So there are levels right here. We're telling us that that's resistance. But what sent this down further was the fact that there was some news based off of China this morning on NVIDIA. Okay. Also, we have Intel that's, not in a good light right now. They're going through some legal stuff and whatnot, but Intel chasing the recent spike could be a big mistake, rating downgrade. Okay. We also had this morning, I believe, NVIDIA, something about China. Where is it? Valuation death cross. I know what that is. Salesforce loses. Okay. Chip stocks dip after Alibaba warns a potential AI bubble in the United States. So a little bit of fear mongering there, but essentially there was some news on NVIDIA this morning talking about, AI troubles, China sales, things of that nature. The chips were just a little, wonky over there. So that is why NVIDIA aggressively sold today. Another tip, again, going back to my gaps, anytime I see gap ups multiple times, right? And there's more gap to the downside. See this gap that never got filled back from the 11th of March? Well, it needs to get filled. So as it's pushing up into one of my favorite setups, as it's pushing up into our top end resistances, I love puts to fill those gaps back down. Absolutely love them. It is, in my opinion, I'm biased. I love puts and they pay. Okay. Because instead of waiting for this grind up and grind up and grind up and grind up and back and forth, you just get one fell swoop that's just one candle, one or two candles straight back down. right? So you get 2 hours of candles that give a whole move that took a couple of days to string back up to the upside. Okay, so I love day trading puts personally. I even swing trade some puts at times, and they are beautiful. Okay, look at this gap back to the downside on Amazon as well. Absolutely amazing. Congrats to all my Amazon folks that took that trade and been holding strong. Looks like we're going to get that gap fill down into those mid 90s. Okay, Tesla. Ugh, I think this could be a massive move. And I really want to show folks that are not inside of our community to see that how organized this is. I want to show you this Tesla trade that I was looking at, large accounts. And I want to show you yesterday at 12:45 p.m., close to market close, I was signaling Tesla overextended resistance levels. Okay, that means overbought, too many cooks in the kitchen. I'm looking for puts at 285 to 290, maybe even into 300. Can look for a move back down to 270, 275. This is how the chart looked yesterday. It was at 286, okay, going into close. And then look at what happened today. Beautiful rejection exactly at our level. So I was giving it up into 300, but that RSI on that 2-hour time frame was already overbought and approaching overbought levels close to a daily. And look exactly where it stopped at 270. So I think Tesla could get pretty aggressive. I know 270 is a support. So if we close and sit right here at 270, but we start to lose that 270, this is a straight up move. Typically you have a straight down move. Okay. So free game here. If you have a larger account, if you know what you're doing, please keep an eye on Tesla that could get weak back down into the 250s. And if the market starts getting really, really weak, if there's some negative news, negative data, PCE, something comes in, it could get a pretty aggressive back down to the downside. We've already made a nice move from the lows, and we've made a nice squeeze move back up. Okay. So it's only right that straight up, straight back down. Okay. With these gaps back down to the low side. Okay. All right. Palantir, beautiful trade we took on Palantir. You can see here exactly, again, I like to show these trade ideas so you can see exactly where our entry was. Entry on Palantir this morning at close to about 15 minutes into the market. Remember, this is PST, so it opens up at 6:30. So about 15 minutes in, said take a look, start loading Palantir, 97 puts, 96 puts for Friday this week. Here's how the chart looked. I started seeing sellers step back in right there at 97, drew the chart out. And because I teach my community members and clients and maybe some of you how to read charts, when I post the chart, you can understand the idea that I'm looking at. So I'm not just signaling something, I'm also giving the chart idea as well, and seeing it play out while the idea is there is beautiful to see. Okay. So there's how it is coming in. I updated, and then I finally updated, said it's gone. Okay. Target 91, that gap below. All right. And as you can see the chart now, look exactly how it played out. Filled the full gap all the way down to 91. Those contracts this morning, the 96 puts this morning were when we entered close to about 167, maybe $200. So $167 to $550. There's your $400 day in profit. So shout out to all my community members and clients that are inside of Leverage University, whether we're working one-on-one, you're joined the boot camp, you're in one-on-one mentorship, you're just in the community. All right, there you go. Dreama, there you go, right there. Love it. Shout out Nico. Hey, Doc, it was almost an instant profit. I got in when other equities rejected highs. Should have left a runner. Beautiful. Just no drawdown. Perfect entry there for Palantir. And I absolutely love it. Our Apple idea is also playing out. So I love these trend breaks down to the downside. So I'll show you this Apple again. And the reason I'm showing this as I wrap up these levels is because when you learn how to read the charts, then you can execute on the same trade over and over and over again as you start to see what these things look like in real time. Okay. It's easy to watch when the charts are still, but you need to be in a community, whether it's ours or someone else's, or trying to figure out on your own, which I don't necessarily recommend if you're new, because there's so many nuances, news, what's happening, why did it drop, a green candle, red candle, where is it headed, why did it pop back up, why is it going down further? It's questions that people have that they don't know how to find the answer for. And that's why we're here providing this information. Okay. So here's a trade idea on Apple that I gave. Apple puts at 8:30 a.m. It is now almost 12 my time. I drew the chart here. I said Apple 225 starting to show some resistance. Here's the trend line, right? Looking for puts back to the downside. I want you to look at this trend line, exactly how that started to break, retested, and came back down, and it dropped roughly about $4 or $5, which is, really good on the option side. Okay. Wow, what a move. Gosh, Lee. Oh my goodness. Today was the day, folks. Today was the day. Here's that big meta gap fill that needs to be filled down to the downside. This will save people so much if they can understand how to get these gaps, how to read them, especially when we gap up. Then you won't chase and you can be prepared for the drop back down. Okay. Tesla breaking underneath 270. Beautiful trade on Netflix. Again, big rejection here. This could be a massive bear flag as we have this idea inside of Netflix right here. Here was the idea I posed yesterday. Netflix puts resistance. Here's how the chart looked right there at 1,000. And then we wake up this morning and that's how it looks. Big red candle right back down. Okay. Oh my goodness. Just contracts 200, 300, 400%. Tesla 300%. NVDA just crazy at 1,000% on the contracts. Amazon 300%. Like, just, do you see how the puts sometimes are just, I want people to learn how to trade the downside. If I have to be that person to be like the put dude, like, come join the party. Okay. So we definitely buy shares at lows, and we do trade calls as well. I do trade calls, but I love the fact that when people get panicked, unfortunately, you're making money off of people panicking, right? Off of people, getting scared and start panic selling, right? That's when it gets aggressive to the downside because you don't want to be on the other side of this, right? So in all summary, just wanted to give you a little update while the market was still open that we do have lower to go. Please be mindful if you're in calls or you are maybe even considering where you buy the dip. Be patient. I keep telling folks that we may have lower. Okay. So if you see any pops higher, they could get massively rejected. These could just be big bear flags, right? Back down. So I'll remind folks that haven't been watching my videos to end us off. Here is 2022. Okay. I want you to take a look at this orange line, which is the 200-day moving average. Okay. 2022, bear market 2022. Do you see how it broke underneath that orange line? Came back up, retested it above it, and then fell back below. Okay. And then stayed kind of below and struggled at this orange line. And then that's when the selling started to happen all year. Okay. So what investors are looking at when they're saying lower is that look at this orange line again. We're popping back above, right? And we're failing back underneath it pretty aggressively that we could come lower. Okay. So we don't know where the top is necessarily. It could go a little bit higher again once these gaps get filled, because there's still a trend line right here. So if it fills that gap and then we pop and squeeze, I'm still looking for a potential for this to be a lower high and reject down lower. So that is how you get the idea of this looks a little bit different than this pullback, because we never got underneath this 200 daily moving average. We got underneath some of the moving averages. Let me turn off this in EMA. We got underneath some of them, but we didn't get underneath all of them, and they started to cross, which is essentially pushing like a magnet down on the stock price. Okay. So be prepared for lower, keep buying the dip. If you're trading, be careful. I love still the rejections in the puts. If you're comfortable scalping the upside, just be mindful of where it's headed. Get in, get out. Volatility going back and forth. Make sure you trim your profits, size down if you're not comfortable. And I will talk to you all in the next one. I'll see you inside of Leverage University and also for some of you reaching out for our boot camp starting in 2 weeks from this video. Talk to y'all soon. Peace, love, and blessings.